Welcome to Crescat's live market call featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please refer to our important disclosures pages on the screen now. These can also be found in the description on Crescat's YouTube channel and on our website. Crescat's live market call is about sharing timely macro and newsworthy geologic updates, both positive and the negative news across our holdings as they arise. These videos represent the opinions of Crescat as a mining and exploration industry advocate. Our objective is to share the overall geologic progress on our activist strategy in creating new economic metal deposits in viable mining jurisdictions around the world. If you enjoy our videos, please click on the like button and make sure you are subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on Twitter for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to Merrick Iwahashi. His contact information is on the screen now and can also be found on our website at crescat.net. So let's get started. Sorry, we were having a little bit of technical difficulties in getting started today, and but Quinton is going to try to find a better way to log in here for his portion. Look, what's so my presentation is going to be short, so I think Tavi is going to be reasonably short this time too. So we'll leave plenty of time for Quinton, and especially given the sell-off in the metals mining stocks today, which what an incredible opportunity to start putting money to work. I know a lot of people have not been putting any money to work in this industry, and so take advantage of it. This kind of action is an opportunity, and we'll get into why the market's reacting the way it is today in a minute. But I want to start first by talking about something that's been going around with respect to the large cap tech stocks and NVIDIA in particular. And, many people, and it's a big thread all over Twitter now, that are trying to compare NVIDIA as if it's Cisco Systems in 1994. Keep in mind that Cisco Systems in 1994, and that's what this chart is showing here on an enterprise value. It's like market cap. It's enterprise value, though, factors in debt and cash. Enterprise value relative to GDP. Okay, why do we do this? Why do we compare stuff to GDP? Well, it's because we're macro investors. We have a macro fund. We look at fundamentals. We look at valuations. Certainly, we are fundamental investors. We are also we're value investors, but we are also macro investors. And what do macro investors do? They compare things to GDP. It gives you a sense of where we are in a cycle. And of course, Warren Buffett's one of his favorite indicators for the overall stock market is to compare market cap to GDP. Well, you can compare individual stocks to GDP too. And when you do that with Cisco Systems back in 1994, you see that it was 0.1% of GDP in terms of its enterprise value to GDP. Okay, so are we in 1994? So the idea is that was the beginning of the internet and the beginning of Cisco's big run, as if we're at the beginning of AI today, and as if we are at the beginning of the Magnificent Seven, big run, or NVIDIA in particular. So the comparison today is people are trying to compare NVIDIA to Cisco Systems in 1994 as if it was only the beginning. Well, guess what? Cisco peaked out in 2000 at 5.4% enterprise value to GDP. So you can see the stock price run up there in the yellow chart, and the second right-hand axis. That's price per share. Cisco went from near zero to split adjusted up to as high as almost $80 per share in 2000 at the peak of the tech bubble. Well, guess what? Cisco stock price has not recovered to that same level of price per share, in the entire 24 years since it peaked out. that was the peak of the tech bubble 1.0. Yes, we believe we're in tech bubble 2.0. So where's, so where is Nvidia? Can you buy it at 0.1% of GDP like you could Cisco in 1994? Where is Nvidia today? No, you can't. It's 10.5% enterprise value to GDP. 10.5%. So that blue line there, that turquoise line, is showing that Cisco Systems topped out at 5.4% of GDP in 2000. Nvidia today is 10.5% enterprise value to GDP. It's 105 times more expensive than Cisco Systems was in 1994. So why on earth can these seemingly credible analysts and market commentators be trying to compare Nvidia to Cisco in 1994? I mean, come on. And it's just absurd. We think we are in tech bubble 2.0 land, and it's the CapEx cycle, that you got to pay attention to, because all the spending on Nvidia hardware, just like all the spending on Cisco system software, is at an unsustainable peak level relative to GDP, relative to these mega cap sevens enterprise values, and this is where we are. We think we are near the top of another major tech bubble cycle. Let's go on to the next. So Tavi's going to be talking a lot about the labor market data today. I just have one chart on it that Nathaniel, one of our analysts here, prepared to talk about. And so, obviously, this is what's going on in the stock market today. Is the jobs data came out stronger than expected, and everyone's like, oh no, that means the Fed, can't reduce rates. They're going to have to, stay higher for longer. And therefore that's bad for inflation, for gold, for silver, for mining stocks, which is, we don't even need to get into all that, because we know it's completely absurd that the environment is negative at all for metals and mining stocks. But it's just one day's reaction, and what an opportunity to buy precious metals and base metal mining stocks today in this absurd, 1 day pullback. But nonetheless, so what are we showing here? So, there's a lot more behind this employment data that one needs to look at to understand where we really are in the economy today. And so what Nathaniel put together here is a percent of the U.S. working age population that is not employed. Well, you might say, well, isn't that like the unemployment rate? Well, no, this factors in. It's kind of like the unemployment rate, but it factors in, who's not in the labor force, because the unemployment rate only factors in the percentage of people that are unemployed that are in the labor force. There's a huge percentage of the working age population that is not in the labor force. So what's this showing? It's showing that the percent of the U.S. working age population not employed is at we're above a level that was the same as post the global financial crisis. We're above levels that was the same as the COVID recession, of course, same as post the global financial crisis, and the same as that stagflationary double dip recession that we had in the early 1980s. And so this is just one way of looking at the labor market data that's showing that the economy in terms of the labor market is not necessarily as strong as it might appear by some of these BLS numbers that come out and that came out in today's report. And now Tavi's going to have a lot more about that to say. So on to Tavi.
All right, let me make sure I'm unmuted, and I am. Apologies if I made a noise that I wasn't supposed to. But let's get started. So unemployment rate comes out. It's about 4%, or exactly 4%. So it ticked up a little bit. And I wanted to put into perspective of a signal that I've been, monitoring for a while now. And since we had unemployment rate crossing the 24-month moving average And we looked at this signal historically, and every time we've seen this, it actually was the beginning of a major deterioration of labor markets. And so this was, is still moving in the right direction of confirming that labor markets are starting to show some weakness. But there are some things that I think that is the reason why the market is moving as well, which I'm going to get into it in a minute. Let's go to the next chart. If you look at the full employment picture, and you can see this as the rate of change of full employment folks, we're starting to see consistent declines now in terms of that. We've also been noting that the part-time jobs have been increasing in a large way as well. I guess Nathaniel, our analyst, has been showing some charts of that, of the year-over-year change of part-time jobs actually increasing recently, but full-time is obviously going the different direction. And maybe the part-time increases have to do a little bit with inflation, the fact that we are sort of confirming this stagflationary environment where folks are being forced to, for economic reasons, go back to the labor market and have 1 or 2 or 3, 4 jobs in order to pay for their bills. And I think this is part of not of essentially showing that the labor market is tight and healthy, but the other way around perhaps. But this is another way you can see it is the increase in permanent jobs losses that we've had over the last months as well. Clearly, that is also taken up more than accelerating faster than what we're seeing in unemployment rates, which I think is also another important measurement of how labor markets are clearly showing issues here. And in my view, why does it all matter? I guess I'm going to tie it up in a minute here. Why this whole story of unemployment is so important for markets and for us that are often deploying capital into natural resources. Let's go to the next chart. And you can see here, if you look at the full-time versus part-time employment ratio, you can see there's a decline in the red line. And so the red line is starting to fall. Back in those years of the early 2000s and even 2008, we've had a very close relationship, a strong correlation between these two lines, which makes sense. Every time you see this ratio declining, which is either caused by full-time jobs declining or part-time jobs increasing, and in which, by the way, that's what it tends to happen. The divergence of the two is what we tend to experience. And that's usually aligned with not only recessions, but also times when the Fed starts cutting interest rates. And so to me, having a Federal Reserve that is, in my opinion, looking for reasons to cut interest rates. And what are those reasons, perhaps? Well, I think one of them could be political pressure. Who knows? But the most important one is, in my view, is the surge in interest payments that we're seeing from the government in the U.S. And other developed economies, in which I think it makes sense what we saw recently with the ECB cutting interest rates. I'm going to talk a little bit more about that as well. But it's interesting that there is indeed a desperation mode of most of the Fed members and politicians to find a way to always go back to financial repression, always alleviate the market and the financial stress by cutting interest rates or doing any sort of policy that helps the market to continue to move higher in terms of financial prices, financial asset prices, and others. And so this is something to be aware of, that it is happening in the economy currently. And I think partially has to do with the next chart. If we see the next slide, Michael put out this great tweet today that I thought was very enlightening. He said, "This is the worst, best jobs reports I've ever seen. Household surveys declined by about 400K, and establishment actually increased. So there's a divergence between two types of surveys that are being reported." And then the second thing they put out is what I mentioned, which is the full-time versus part-time divergence. Now, the third thing that he talked about is something that I think some investors are starting to catch on to this. But I remember seeing the charts of immigration, and also, and this is starting to have a major impact in labor markets and inflation as well, where we're seeing native-born part of the population actually seeing a shrinkage in labor markets, and foreign-borns, myself, actually increasing in a large way. So if we go to the next one, next slide, you can see this chart that is fascinating. Most of this increase in labor markets that we've seen since the 2021 or so has been caused by foreign-borns actually, participating more and more in the labor force. And you can see the red line has basically gone sideways over the last few years. I think a big sign of that, if you go to the next chart, is what we're seeing here. This is probably one of the most important charts of this year, in my opinion. It's something that caught my attention. The first time I saw this, I was kind of not believing the chart, because I actually thought was something with birth rates or something along those lines, and I was like, this is not right. But then once I think Quinton is the one who brought it up. I was like, I think it's illegal immigrants. And then, looking deeper into this, it's like, wow, it is illegal immigrants and immigrants in general coming into the U.S. And when I looked at this, I mean, this is something since the 1900s. We just haven't seen anything like it. I know you can go back to the Cuban Revolution times in the early 90s, when we had a very large amount of immigration or immigrants actually come into to Miami, and that was a big change in the Miami economy and so forth, and how the housing market was impacted in that time, and also even the labor market. And the same thing is happening today with this. And in my opinion, this is what is the reason why the labor markets are still not showing more cracks. Number one, it's the main reason why inflation is even more embedded than it was supposed to be, because those folks have to live somewhere, and they're going to crowd out the rental markets most likely, which is what's happening recently. There are other things that have been happening as well as part of the this crowding out of a population coming into a new country and trying to figure out how to live here. We're seeing crimes increasing as well in some cities, major cities, and those things are going to be normal. Those are going to be parts of also what we saw back in the early 90s with the Cuban Revolution was part of that. The thing of the Cuban Revolution with today is that it doesn't even compare with the magnitude of the inflows that we're seeing of folks coming into the U.S. today. And so, by the way, none of what I'm saying is a political view. It's all coming from an economic standpoint. But clearly what we're seeing of this supposedly tightness of the labor market perceived by some investors has a lot to do with immigration. And if you look deeper into the data, which shows, the real organic growth shown by full employment and other folks in high paying jobs and other things, we're clearly seeing a shift that is starting to show some cracks that I think the Fed will have perhaps a reason to use that as to justify cutting interest rates and not sound as political as it would prior to other times. And by no means I agree with cutting interest rates, but I also think it's inevitable given the imbalances that we have in the global economy and the US as well. Let's go to the next chart. And so let's look at some of the things that I would say a guy like Stanley Druckenmiller would be watching for. In fact, there's a Druckenmiller index in which he looks at different cyclical indicators, the cyclical industries that tend to show signs of outperformance, of underperformance in different parts of the economic cycle. And those are different, industries. In this case, I picked three just so the chart doesn't get too crowded as well. And you can see here, restaurants are starting to really underperform the S&P 500. Auto retailers are starting to really underperform as well. And you can see the overall retailers are also showing the same weakness trend. You can go deeper into this, and small cap names are showing something similar. Hotels and casinos are showing something similar. And so clearly there's a lot of parts of the market that are highly cyclical and tend to be linked to the changes in the business cycle that are starting to show some high levels of weakness that I think are important to point out, along with the labor markets. And potentially, my opinion, I saw somebody comment on the chart that I posted about full-time employment actually starting to decline. and somebody said, no way they're gonna cut interest rates. I think it's a lot easier to have that view when we go from 7 cuts priced in the markets to basically 1 cut now priced in. And when I looked at all these macro indicators, in my opinion, there's a very high probability, much higher than what's priced in currently, that we may see actually more cuts in the Fed funds rate that most actually think that it's possible. And so now I'm paying close attention to this because I think this is an important segments of the market that are starting to show real signs of fragility in the markets. Let's go to the next chart. And so you can see here, this divergence doesn't matter until it matters. I mean, large cap versus small cap stocks. I mean, about 50% of small caps are below their 200-day moving average. 2/3 of them actually don't make any money. And the divergence continues. I mean, these stocks are down over 15% or so from their highs, while markets continue to go higher. And the same thing is happening with the credit risk that we're looking at in terms of the spreads of corporate bond spreads relative to U.S. Treasuries, with even today, a very steep decline in U.S. Treasuries, and still we're not seeing that risk spreading across other things that are even riskier, like corporate bonds. And to me, that just doesn't make a lot of sense. And I think that it's one of those sort of domino effects that people only see after the fact. But clearly there's some things are starting to fall. And if as a market participant and been watching markets for a long time now, I would be very cautious to all those signals that we're seeing. And I think this divergence appears to not matter because it hasn't really been relevant in the last few years. But ultimately, small cap names, which basically are 2/3 of the employment market, by the way, it's an incredibly relevant part of the economy, will matter in my view. And I think are telling a much more realistic story about the economy than the white line that you're looking at this chart. Let's go to the next chart. Another thing that is happening is, when I see a day like today where treasuries are having such a large sell-off, it makes me think about the unrealized losses in most of those banks. Regional banks and other banks that are still holding a lot of maturity bonds or long maturity bonds, and they're either being seen as held to maturity or available for sale. Doesn't matter in this case because there's still assets that are facing big losses in their balance sheet. The Fed is also another large institution, and other sovereign institutions that are also facing a similar dilemma, as they also hold a large percentage of U.S. Treasuries. But nonetheless, I believe that the deterioration of a balance sheet recession type of environment is one of the things that I think, again, markets are just not pricing those things in. The risk is just completely being ignored, as if those things don't matter, but they do matter, and they'll likely matter a lot in the next coming months here, as we see these divergences becoming more and more important here. Let's go to the next chart. So one of the things that makes me myself, and I think everybody in this presentation is extremely bullish in precious metals and commodities. And one of the main reasons why we hold that view, and especially on days like today, it's a lot easier to make a call for gold and silver when things are up and breaking out. But when all these metals are down significantly, it's a lot harder for folks to have conviction in their thesis. I always say this, and I'll say it again: you can borrow my thesis as much as you want, but you can never borrow my conviction. And big money is made on high conviction, on taking advantage of days like today, where there's large volatility and desperate moves in markets, in which create these opportunities and windows of buying opportunities, in which a lot of very intelligent investors tend to take advantage of it. And today what we're seeing here is, to me, one of the most important charts of positioning is related to this. Interest payments relative to the federal debt is now at about 4%. If we looked at estimates, we're going to be at about close to 5% in 2025. The Fed assets continues to decline, which makes zero sense in this sort of dilemma that the Federal Reserve and the government are facing. Ultimately, the government and the Federal Reserve are responsible for paying down the debt. And what is remarkable is the fact that if you looked at across all economies in the world today, and I can't find one that has higher interest payments relative to GDP than the US. I just don't have this chart here yet because I'm working on it, and maybe next week I will. But the US has the largest number of interest payments relative to GDP in the world today. And that is shocking to me because I know that if we see those imbalances continue, this is completely unsustainable. I mean, back in the 1940s, if we want to use an analog of the leverage problem, the 1940s, we had to run a budget deficit that actually had to go from deficit to surplus on the primary basis. And what if we see that today? What if we have to see that in order to create the discipline back and reestablish especially liquidity in the treasury market and buying volume as we used to be seeing in the past? I think all those things are important questions. And when I look at a lot of mining projects today being sold for, not only peanuts relative to the net present value of those assets, but also when I look at the estimates for gold prices, 5-10 years from now. And a lot of these mining companies are still using $1,850 or sub $2,000 an ounce, where I think that's just, not realistic in a world that I think we're going to be in 5 to 10 years. And that's why I see these opportunities in the mining industry, not just me, but anybody here in this call. Let's go to the next chart. There you go. Money supply and central banks. I wanted to point this out because the ECB announcement came in. They cut interest rates. By the way, this is the first time the ECB started to cut interest rates before the Fed during a hiking cycle. So we tend to see hiking cycle starts with the Fed, and then the ECB follows along. And then the Fed starts cutting interest rates, and then the ECB starts cutting interest rates. So there's a lagging effect usually with the ECB and relative to the Federal Reserve. This is the first time in the last 30 years since the ECB's history, which was in the early 90s, that we started to see the ECB actually move ahead of the Federal Reserve when it comes to cutting interest rates. And I think this is a reflection of the amount of debt that is in their system. And by the way, their interest payments relative to GDP is way below the US itself. Some of those economies outside of Italy that is very close to the US, most of those economies are still sub 1%. The only difference is that they don't have any growth. And so if they don't have any growth and they're also paying down large amounts of their GDP into interest payments, that becomes a problem. But the US has growth now. And what if they don't? What if the US just is not able to keep up with this growth in, 2 to 3 years? Or what if we have a contraction? What does that do to interest payments? Can we see double digits of interest payments relative to GDP? Yes, it's very possible. The BIS and the IMF, in fact, claim that a dangerous level for interest payment relative to GDP is between 3 to 6%. The US is at 5%, and we're still seeing a lot of the debts being rolled over. We might see a lot higher than that. So, those are things that I really think that are becoming more and more relevant in a very short window here. And elections coming up, and all those things are going to start becoming a topic in markets overall. So clearly, this is the idea of the ECB doing what they did is in line with this chart because it shows money supply increasing despite the fact that central banks, communicate this idea that they're fighting inflation. And all we're seeing is further monetary dilution, again, to alleviate the financial pressure that we see in the system, given the fact that we have so much debt globally. Let's go to the next chart. So that creates the inflation idea. And today we're seeing a big sell-off in gold. It's the largest sell-off we're seeing in gold since 2020. And you can see that in this chart. And, there are many reasons potentially why. I mean, some people are saying that this has to do with the labor markets. The labor data came in stronger. I just gave you my view about the labor data. and markets may disagree with me for a day or two. And that's clearly the case today. Another thing that is potentially a reason that a lot of the media has been reporting has to do with maybe China not buying gold anymore, and supposedly announcing that they're pausing their gold purchase. They didn't announce that. All they did is they reported their numbers of gold, and they didn't increase from the prior month. Now, how many times have I shown a chart of central banks buying gold recently, but also the percentage of their ownership in gold and how much it used to be in the past? Today, it's about 20% of the overall international reserves. Forget about China. Think about global central banks, all central banks in the world, the BOJ, the Russian Central Bank, the PBOC, the ECB, the Fed. Even the Fed bought gold in the past. That's not out of the picture. And so if we see a move back in which other central banks continue to buy gold moving forward, and I think this is a total overstatement of this sell-off in gold, if that's really the reason behind this sell-off, because I think there's other central banks that will join the party and are already joining the party in terms of accumulating the metal to improve the quality of their international reserves. So in my view, the same way we talk about, not me, but a lot of people talk about Bitcoin being the hodl, hold to your life. I think we can say godl for gold. Just switch the L and the D. I'm starting a new movement. Let's go to the next chart. And so the same thing is happening with other commodities. They're still moving higher, despite the sell-off that we're seeing today. Agricultural commodities were moving a lot higher recently. And then people reporting, wow, this is all due to cocoa. And now cocoa is moving higher again, and starting to actually reaccelerate prices of overall agricultural commodities as shown in this chart. If we go to the next slide, one person that I follow closely is Pierre Enduran, in which he, he's an oil trader, that really a commodity trader, and probably one of the best commodity traders out there. It's a guy who's really sharp and usually have a lot of reasons behind his commodity thesis. And he's been, a very big, pronounced a bear, had a big bear argument in oil back in 2014, 2015, and then flipped to bullish. And then also was the first guy who wrote about oil prices going negative. And now he came out not too long ago. I guess his fund had 2 good months in April and May, but it still thinks that he believes that this is the beginning of a copper bull market. He's very bullish copper, and also believes that we're going to run out of cocoa inventory potentially. So those are interesting, comments from a guy that I respect, and I think that he's probably going to be right. And he's probably coming from an idea that I think we've been talking about here for a while, which is the deficit caused by mostly the underinvestment we're seeing in most of the mining industry. But also with the fact that we're seeing declines of production and the massive increase of demand that is still ahead of us from electric vehicles and electric heating, and now AI adding to the picture. And the irony that the higher the higher NVIDIA goes, the higher semiconductors go. Think about this. The higher is because they're usually following increase of sales, increase of fundamentals most of the times. And you would think that if that's going to be the new world where we're going to see all these sales of GPUs and all sorts of things, well, that's going to have to use some sort of new demand of electricity that requires as well new demand for also changes in terms of infrastructure that also requires more materials. And so the higher that goes, the higher copper should go as well, in my opinion. Let's go to the next chart. And so the development of the inflation picture continues to also solidify the story here. The container freight costs that we're seeing globally, this is a good chart because it shows this, separated by different indices, as you can see here, and all of them have been increasing outside of one of them, the green line. But this is important. This is, the U.S. economy depends on a lot of import products. And as we see this freight costs is globally increasing, that certainly has an impact in especially in consumer prices here in the U.S. And the dilemma that the Fed is facing is the fact that inflation hasn't gone away. Inflation is still here, and they might have to cut interest rates for all these other reasons, potentially because of the cracks in the labor markets or because of the surge in interest payments and all sorts of things that are going to have to come up with in order to justify cutting interest rates in a very, very inflationary environment, in my opinion. Let's go to the next chart. I'm almost done. China is another one, an economy that I pay close attention to. And recently we're seeing manufacturing labor costs increasing in China. Look at that relative to other countries in the world, especially other peers of China in that region that are not seeing the same degree of manufacturing costs increasing. And one of the reasons is in the next chart, in which it shows a large volume of robots increase relative to number of employees in China. So you're seeing automation happening in China, which is a reason why as well, why this cost of labor is not as meaningful. But we're yet to see, I think the most important thing that people are seeing in this chart is China and Japan. But I think the most important thing is actually the US. The US is far behind that, and yet it has to invest in robots and automation and all sorts of things. And that comes with the demand for a lot of materials. And I can't imagine a world that we're going to see the U.S. participating more and more in this automation and reshoring through robots without increasing as well drastically the electricity consumption and other things that create also the demand for copper and other base metals that are going to fall into this demand picture. Let's go to the next chart. I'm almost done. And gold miners today selling off with gold, and really large declines. I was commenting with Kevin here before this presentation. These declines we're seeing, it reminds me of the March of 2020 crash. I mean, some of those are really large declines that we're seeing. And I remember this so well because those are some of the best purchases we made in our funds was during that time. Was when we basically closed our eyes to the public markets, and what we did was let's focus on the intrinsic value of these businesses. How much do they have of potentially of gold in the ground, and let's just buy some of these businesses that are so cheap. And that's what we did, and that was the success of the precious metals fund, was really being able to buy a lot of these assets at such cheap levels. And here we are again, another one of those shakeout moments. Again, it's much easier to be bullish in gold when things are breaking out, but when you have moments like this, and investors are the successful ones, are the ones that are able to act and take advantage of it. I think this is my last chart, so I'm going to pass it on to Quinton. He's muted, by the way. Is Quinton there? Uh-oh.
Oh.
Uh-oh. Time to get back in the saddle.
All right.
Give me a second here, guys, because I want you to listen from Quinton.
That's John Wayne. I can't do John.
Let me see if Quinton. The one way we could do it, I was thinking, Kevin, is the worst case scenario is, oh, there you go. He's back. Oh, he's on.
I tried to do it. I'm doing it on my phone, and
okay,
the button. I hit the wrong dang button.
All
right. If something happens, you can call me, and I'll put you on speaker, and you can speak. Okay.
All right. I hit the exit button instead of the mic on button. They're kind of right next to each other. But anyway, all right. I'm here. One of the downfalls of updating your computer is all of a sudden it doesn't work. I updated the computer, and because I'm not at my normal location, the firewall wouldn't let me into the Wi-Fi network. So I am doing this off my phone, but with Nathaniel's help here, I think we can get through things. Look, we have a lot of companies that are getting their feet under them, and they're getting back in the saddle. They're getting out and exploring. And I've been talking about this for the past couple of weeks here. This week happened to be a prolific week in terms of news and updates, meaningful updates about exploration that many of our companies are going to be doing. All right. So we're going to carry on with this theme about getting back in the saddle. All right. Now, before we go there, let's go to the next slide. I've got to give my weekly boring geology lecture. Okay. My favorite episode of our friend here, Bender. Futurama is probably my favorite show in history. But anyway, my favorite episode is when he finds conversion and he goes off the drink. But anyway, that's why his lips are rusty. Let's go to the next slide. We're going to talk
You're
about
dating your age, Quinton.
Yeah, I know. It's terrible. Okay, so we're gonna talk about a theme that kind of interplays with some of the stories that we have this week, and I thought I'd bring this up because it's been a while since I've done a geological lecture, but it's also kind of important for why some porphyry exploration is successful, why some of it isn't. Like this is meant to be food for thought, and it shows people one of the very important aspects of porphyry deposits in particular that comes into play when exploring. So I'm going to try in about 5 or 10 minutes here to explain a basic concept. Look, what you're seeing here is a schematic diagram showing the convergence of two plates. The plates are in green there. So we have an oceanic plate coming in from the left, and it's diving underneath a continental plate, which is a big, fat, thick green thing over on the right. Now, as the oceanic plate dives under, along with the mantle material underneath basically the lithosphere is what we call it, the rocks start to warm up and they start to melt. Okay, and you can form magmas that rise up through the crust. They usually do it in succession. You usually get first melts that come up and underplate the lower part of the crust, and then as those cool and crystallize, they generate newer melts, or like more refined melts, we'll call it, that are usually higher in silica and other metals, and those rise up further into the crust, and then ultimately they differentiate even more and become magmas that produce volcanoes. Okay, so, and it's those that actually produce the porphyry. So we're going to talk about that uppermost environment where you see a magma chamber with a volcano immediately above it. We're going to zoom in now. Go to the next slide. And you can see here a picture, a rendition of that magma chamber. It's more lenticular in this image, that dark brown thing. But it shows a magma chamber. And that magma, that molten rock, as it cools, crystallizes, it produces even more differentiated melts, even more refined melts that rise up as what we call porphyries, porphyritic magmas. And those are the...
You will lose him.
Uh-oh. Yeah, I can't substitute for Quinton on this part of the talk, that's for sure.
Hold on. Let's see. Give me a second here. Hold on, folks. I'm trying to get a hold of Quinton. Yeah, Agilist Horseman said, I hope AI solves technology. We we could do an AI of Quinton.
I can talk about what
there we go. Hold on. He's calling me.
Are in general.
Hey, do you want me to put you on speaker so you can speak? All right, then I need to confirm Kevin can hear. 1 second.
Because that's where the big copper and gold deposits come from, and the big copper and silver.
All right, coming up, folks.
Okay, are you there?
Wait, you're back. Can you hear us? All right, 1 second.
Okay.
All right, you're in.
You got me, right?
Yes, everybody can hear you.
Oh my gosh, what a nightmare.
Can you hear Kevin? You good? Yeah.
All because of Wi-Fi. Bugger me.
Turn it up if you can.
Okay, I'm not sure where it cut out, but basically the magma chamber that we see, the lenticular thing, generates more differentiated melts. These are porphyries that arise close to surface, maybe 2 to 5 kilometers below surface, and they feed volcanoes above. Now, it's those magmas that, when they crystallize below the surface, generate these big deposits of copper and gold and whatnot. that we see so commonly in exploration stories in this industry. This is kind of the big target that many companies, including majors, are seeking right now because of the demand for copper, and also they can have huge inventories of gold and things. Okay, but what I want to talk about today are the deposits that form from them and how they might relate to a process, a temporal process known as erosion. Okay, so in this image, you can see I've circled the porphyry in green. That's the porphyry deposits, kind of a vertical oval. And then above that, we get epithermal deposits. These are from fluids that have basically expelled from the porphyry, risen to the surface, and form shallower deposits, usually of precious metals. Okay, so we get kind of two systems for in one overall process. Now, the length of time it takes to emplace a porphyry and form all of these deposits, the porphyry deposit and the epithermal deposits above it, it might be a few tens of thousands of years, up to maybe 200,000 years. Okay, so it's not an instant process. It takes a bit of time. Go to the next slide. Now, if we think about the fact that these deposits form over a period of time, there are some interesting phenomena that can happen. Okay, one of the phenomena that can happen is telescoping. Okay, now if the terrain, basically if the surface or the land is moving upwards, it's rising, tectonically rising, you can often get a process where the porphyry, because it's kind of actively forming, at the same time there's a great deal of erosion at surface, is kind of basically tucked right up into the epithermal system. So over on the right-hand side, you can see that the green, the porphyry environment, and the epithermal environment can even be overlapping. I mean, they can be literally right on top of each other. That's a very common setting. Okay, now, this is, imagine a telescope. Okay, this is a compacted telescope. Think of it that way. The telescope is all scrunched up, and everything's been condensed or packed into the one picture. Now, you often see this in environments in South America, in the Andes, like in Peru. You can see the porphyry's tucked right up into the epithermal system. Now, there's occasionally on Earth, there's environments where it's just the opposite. Go to the next slide. Where there's actually land subsidence, like the land surface is falling as the porphyry and the magma event is happening. And you can actually get kind of an extended telescopic effect where the thing is basically separate. The magma chamber is further and further separated from the epithermal system above. And I've noticed this phenomena in just a few locations around the world, particularly in Japan. Everybody wonders why there's no big porphyry deposits in Japan. I think it's because overall, the land surface in Japan is gradually subsiding. It's, subsiding into the Pacific Ocean. And because of that, you stack more and more volcanic material on top of that, and the epithermal systems have to form at a higher and higher level, which means they're way, way above the porphyry environment. Okay, so they get separated from their source, if you will. Okay, now that's what can happen when they're forming. You can get telescoping either where they're all scrunched together, or you can get telescoping where the two are separated. Okay, go to the next slide. Now, this is just a refresh. This is the original diagram that I had. The setting here, we'll say let's say this just formed. Okay, this porphyry deposit and the epithermal over the top. Let's say it just formed. Okay, now let's go to the next slide. But it formed in an environment that is rising. Okay, so we're after formation. We're after the period in which everything's set in place. And because the land surface is rising, you have rapid erosion. Okay, the surface of the land is literally being weathered down to expose the porphyry. Now, this is critical. If you think about it, if you didn't have a rising land surface, your porphyry would be 2 to 5 kilometers below surface. You couldn't get to it. There's no way. Okay, so this is actually a very important process. After formation of a porphyry, you've got to see the land surface rise. It can happen immediately after it formed. It can happen millions of years after it formed, whatever. But you've got to see a condition where basically the land rises and erosion strips off all of that overburden, if you will. Okay, this is very important. Okay, now this is kind of the Goldilocks effect. You think about it, because there are places on Earth where we know there's a porphyry down there. It's but it's way out of sight. It's 2, 3, 4, 5 kilometers down. We can't get to it. We also know there's conditions like the next slide. Go to the next one, where the porphyry has been eroded. Okay, it's been uplifted so much and there's been so much erosion that it's eroded away, and all we have are the roots. Okay, we don't want that, obviously. We want what we saw on the previous slide, which is basically a system that's been uplifted near surface that we can access. We can drill, we can make a discovery and then turn it into a mine. Okay, now if you think about it, the odds of having that porphyry in the exact right position on this planet is pretty slim. There's a lot of porphyries out there. There's, literally hundreds and maybe thousands of porphyries around this planet. But only a few of them, there's a small subset, are kind of in that Goldilocks part of the erosional regime, or the temporal regime, where they've been eroded to the point where they're accessible at surface. So I want people to think about that, because that is one of the big challenges we have in porphyry exploration. Oftentimes we find ourselves in a situation where, darn, we're here too late. We're in the roots, or, oh, darn, the porphyry's there, but it's way beyond our drill bit. It's way too deep. We got to find the ones that are right in the right spot. Go to the next slide. Now, in a subsiding environment like Japan, you can get the opposite. Okay, so this is our original slide for frame of reference. Let's go to the next slide now. And in places like Japan, you actually, because there's subsidence, you end up depositing more material, usually volcanic material, over the top of everything. And it simply buries the system. And it might even segregate like I said earlier, segregate the epithermal system from the porphyry if the system is active. All right, so that's another situation we have. Okay, so that's just my boring geology lecture for the day. I hope it's not too boring, but it's meant to give people food for thought about, the challenges of porphyry exploration, at least one aspect of it. All right, let's go to the next slide. Okay, so we have quite a few updates, and some of them are going to be porphyry, so you'll see why all of that stuff I just talked about comes into play. But this one happens to be an intrusion-related gold vein system. Okay, a lot of people have speculated this is orogenic or something like that. Like, no, it's not related to metamorphic processes. It's related to intrusive processes at Sherbet. We're doing a study at the Colorado School of Mines to study this, and we've pretty much concluded that it's related to magnetic processes, but deep processes, so it's not really a porphyry. But these guys at Goliath are back to work, okay? And they put out news that they are mobilizing to Sherbet. And we're gonna start seeing some drilling this year, and they're gonna test a couple of new targets. So I thought I would jump through their plans with everyone so you can see what's coming up. Go to the next slide. Okay, the first thing they're gonna do, they are gonna go back to Sherbet, and they're going to drill off more of the veins that they've found today. Now, if you think back to when we first started work here at Goliath, the original target, Sherbet, the planar vein that is exposed around the mountain there and dips gently to the west, it was an easy target to wrap your mind around. But as we drilled more holes, or as they drilled more holes, they found that there's a multitude of structures down there. Okay, and at this point, they've done an absolutely fantastic job modeling the vein system at this project. And it is wide open, but this is what they see right now. They see Sherbet, which is the green one, kind of the olive green. They see a couple of structures above that, but now they also see structures below that. We've got the Golden Gate and the Bonanza structures down beneath, and those are the ones that are wide open. This is very intriguing. It's not just the Sherbet, but this is a stacked system of veins that has even more potential than I think I even conjectured or told people about way back when we first started. Okay, this thing definitely has capacity to hold a lot of tonnage. All right, go to the next slide. So they're going to be testing the Sherbet zone, did drill in, infill drilling basically, and many of those veins. But they're also going to test some of these new targets. Okay, now this one to the southeast, it's about 1 kilometer to the southeast of Sherbet, is called Jackpot, and it was found last year, and it is probably part of the same vein system, albeit the outcrops they found are a bit distal. They're 1 kilometer away from Sherbet, but it's almost certainly part of the same system. The mineralization looks identical to what they have at Sherbet, and they have fantastic grades, very much like they saw. Okay, so this will be an exciting target to see tested here soon. There were some, absolutely spectacular grades. I think 600 plus gram per ton off of outcrop there, and I think this is going to be a super season to make new discovery, see big extensions of that vein system. I think this thing is very similar in nature to the Pogo deposit in Alaska. It reminds me a lot of that. And to see this kind of left lateral leap where, the vein system could be 1 kilometer across, this basically these lower veins might extend clear out to Jackpot, is a huge, huge win. I mean, this thing could grow by leaps and bounds. Okay, so this is one of the more interesting targets they have this year. Go to the next slide. But they're also going to test the Treasure Island target. This was one that was uncovered up in the glacial fields to the north. It's on the Gold Digger project, but it's way up at the north end, up towards the Stewart end of the mining property. Now, Treasure Island is a small erosional island, or we'll say a window through the glacial field, that is exposed to the same rocks. These are basically the same types of host rocks, same age host rocks, the Hazelton and whatnot rocks that we see down at Sherbet. But in this case, the mineralization that I've seen, the samples, look a heck of a lot like a VMS. Okay, so if you remember, in the Golden Triangle here, we have an early event, basically one that was formed at the time the rocks were being deposited. It's a volcanogenic massive sulfide age, or system that was the same age as the rocks they formed in. And then we have younger systems like Sherbet, which is much younger in age and is formed from processes unrelated to seafloor processes. So in this case, this is probably an older system, but it's very intriguing because there are some well-known VMS systems in the Golden Triangle. There's one up to the north, I believe, Decade Resources has, called Red Mountain. If I remember, or Red Canyon or something like that, I think. It's up by Stewart. But then, further north, we got, Eskay Creek, a little known deposit called Eskay Creek. Okay, so these guys have basically stumbled into an exciting VMS target that nobody's ever laid eyes on here. And we are going to get to see for the first time what a drill might turn up here. They had some very good numbers last season. Let's see if the drill can prove those up. Okay, go to the next slide. Okay, and then a little bit further to the south. This isn't quite as far north, but we have another target. Sorry, I got a teeny tiny screen here. So it's a full contact discovery. I was up there with the crew last year, and I got to see the vein system. To me, the veins look a lot like the Sherbet veins. So these are not VMS. I think they're more akin to what we saw at Sherbet. They're probably intrusion related. And in fact, there are many of these occurrences across the property. I'm not sure why they prioritize this one per se, but when I was up there for a couple of days, we bounced around and probably saw a dozen of these things. But this definitely has the same feel as Sherbet, and we'll see. Maybe they make a new discovery of full contact that is a similar intrusive related vein system, high grade vein system as we saw at Sherbet. All right, let's go to the next slide. Now we're gonna jump over to Eskay. Everybody's been emailing me. What on earth is going on? So there was an announcement this week where Eskay has agreed to combine with P2 Gold. P2, why is it called P2? Well, it's Pretium 2. Basically, it's the the guys that ran Pretium, which of course was wildly successful with the discovery and development of Brucejack. So Joe Vesnick and Ken, Ken was the geologist on the project, and Joe was the CEO of the company. And they form a really good team. Okay, now a lot of people say, why would you do this? Is it about the project in Nevada? Well, you know, the project in Nevada, I know it. It's a good project. It's interesting. It's probably going to be a slow walk. I mean, but it is a great resource. And I do see a lot of the projects in that region increasing in value lately, because you're seeing companies like Anglo Gold develop, the old Corvus project that is now turning into what looks like a multi-million ounce gold system and soon to be a new gold mine. So, but is that really what this is about? No. Okay, this is a phenomenon, and I've talked to Mac, and I made sure that I could talk about it. But Mac says I'm ready to retire. He's in his mid 70s. So was Rob, the CFO, and they wanted to hand the company off to people they felt were very, very capable and who've demonstrably created wealth for people. So Mac has been good friends with Joe for many years. He's told me many stories about Joe helping him in certain circumstances. And quite frankly, they play well together. I mean, that's the long and the short of it. Okay, so it's an exercise where we're seeing kind of a changing of guard. Okay, and I think you're going to see that more and more in the mining industry. And if it's done in an orderly fashion like this, I think it's a good move. Okay, so I'm supportive. We will see, the team that we have really doesn't know Joe and Ken that well yet, but they will. I think they're going to meet each other next week, and I think everybody will figure out how to work together. But the point is, you'll have a younger team to come in and manage Eskay, or the combined company, we'll call it. And at the same time, you'll have a super strong team that knows how to go out and explore and create value. Okay, so in the big picture, I think this is a big win for both companies. Right, so
I think it's a big win, Quinton. Can you tell people a little bit more about Brucejack and what it was and where it was and how and what happened?
I can't see. Can you see, guys?
Yes, 1 second. Let me switch for him. There we go.
I think. Okay, I'm getting feedback.
Oh, he can't hear me.
Quinton, okay. You will hear feedback if I talk too much. Sorry, so I'll try to be quiet.
Okay, I'm getting a big old echo. So turn off the speaker. Okay. All right, core assets. Look, Nick called us a couple days ago after he put this news out. This is exciting stuff. He basically has done some geophysical work. Hey, Tavi, can you turn it? I'm getting feedback.
Well, it's not me right now. Hold on a second. I have to keep my unmuted. My mic unmuted, so I don't have an option there. I don't know what changed though. Did you change anything on your end?
No. Yeah, terrible.
All right, well, give me a second here. Let's see. Let's try it again. Say something.
Oh, shoot. You got bumped off now.
No, you're good. You there? Hello? Quinton? Can you hear me, Quinton?
I can, but when you touch something, it kicked me off, so I'm gonna log back on.
Oh,
you're right. Okay.
All right. Keep speaking. Let's see if it does it again.
Okay. Yeah. All right. Does that work better?
Yes.
Okay. Look, I'll go along. You'll have to move the slide for me. Okay. So Core Assets put together a geophysical program that's done a fantastic job of highlighting the buried porphyry system. And this is where the discussion I had earlier comes into play. I think you'll see what I mean here in just a second. They have found through the geophysical work they've done, in this case with the magnetics, that there is an intrusive complex, basically a porphyry system that underlies the property that's extraordinarily large in scale. It's several kilometers across, about 3 kilometers or so. Okay, and these guys have done an exquisite job putting this picture together. Rather than read through the highlights there, I'm going to just ask you forward to the next slide.
Oh.
Oops,
Your pin is back. Hold on, sorry. You go.
One forward. There you go. All right. Here you can see the magnetics really does a great job highlighting the porphyry complex at depth. Now, they've been exploring the CRDs, the carbonate replacement deposits that are associated with the porphyry system here. But now they feel compelled, and look, I'm supportive of this. I think they're onto something very intriguing here to test the porphyry part of the system. They've got a 5,000 meter program designed to do this work, and I think this could be a really exciting summer for them. Now, first thing I want to say is the porphyry here happens to be a bit younger in age than a lot of the porphyries further to the south in the northwest BC area. Okay, so this is a different beast. It's a different type of porphyry. In fact, the chemistry and the age of it is actually more similar to the pebble porphyry that's in Alaska, even though that's a long ways away. Just the overall geology looks a heck of a lot like the pebble system. Okay, so they have modeled this data. They've done inversion models, which basically give us a 3D rendition of the intrusive complex at depth. And they can now rationalize where the CRDs are that they've been testing. I mean, they're all fantastic discoveries in their own right. But we're going to see what they can do now by testing the porphyry at depth. All right, so they've got a number of targets laid out. Now go to, and by the way, there is a 3D model. You can click on the website and have a look. Okay, so I'd encourage people to do so. All right, but go to the next slide. And they've kind of rationalized, like I said, in a schematic sense, where the different occurrences, where the different deposits they have lie with respect to the porphyry. This is a schematic image that shows a porphyry deposit in orange with the various CRDs and even skarn deposits and vein deposits that they have surrounding it. Okay, and each one of those numbers corresponds to one of the deposit types. If you take some time, read through this. You can read through their news release. You can get a little more depth. Okay, but I really think that the guys are starting to develop a picture here that could lead to a major discovery. Okay, now one of the things that they put in the news release that I found most intriguing was in the next slide. Go to the next photo. And you'll see one of the holes that they drilled back in 2022, hole number 6, actually bottomed in very discernible stockwork veining here that looks to be like a major porphyry discovery of some sort, albeit they didn't get too far into it. But they have a very intense stockwork veining, very advanced styles of alteration, looks pretty high temperature. And I think if these guys were to test a bit deeper and perhaps in an area not too far away from here, these guys might make a very large porphyry discovery. So I'm dead keen to see them do this year. I think this is the kind of thing, a discovery here like this would be what really attracts a major mining company. Okay, so I'm glad to see these guys going along and willing to do this work. All right, go to the next slide. All right, Lion One put out an update. I'm going to kind of give a little bit of engineering. I'm a geologist, but I can do a little engineering. So I'm going to give you a bit of an update about the operational side. Okay, now they have some fantastic results, mainly zone 5. These are very typical of Tuvatu, extremely high grade, and many of the loads there. But they've also been making really, really good progress on the mining front. And I'm just so hopeful that they can get through this experimental or development phase, I guess is the best way to put it, and really get their legs under. Okay, they have got the mill operating now, and according to the release, they're capable of doing 400 tons per day or more in excess. So they're basically over nameplate on the mill. And now they're mining mechanically as well. And they have reference here to two things. They've got both long hole mining, which is the first for Tuvatu, as well as remote bogging. And you might say, well, what the heck is that? Well, I thought I'd put in a couple of slides to explain. Let's go to the next one. Okay, so first of all, here we can see the location of the mining activity, in particular over here on the right-hand side. The drill holes that you see, those are the infill drill holes that they're completing and yielded all those very high-grade results. They're all in the immediate area in which they're developing and, actually producing ore now. Okay, and then they have two areas. One where they're doing long hole stoping or long hole mining, and they're also doing remote bogging. And that's the purple and the green arrows there. Okay, go to the next slide. All right, so what is long hole stoping? Well, if you have a nice fat ore body or fat load, call it, you can develop two levels, and then you can drill vertical holes or steeply inclined holes along the axis of the load, so basically parallel to the load. And those holes can connect the upper level to the lower level. Okay, now, why would you do this? Well, if you think about this, you can slip explosive down there, and you can sequentially blast this thing, and it results in incredibly cheap mining. Okay, you can see the chutes or the passages below. That's where the ore is extracted. But this basically is a way to make mining cheap. Okay, it's a bulk way to make mining cheap, and it can result in very low cost. So I'm hopeful that they can pull this off. It might be a bit dilutive. I'm not sure what it will do to the grade, but I'm hopeful that in the long run, this will play out. Okay, now those photos over here on the right are not actually Tuvatu. This is an image I simply grabbed off the internet, but it gives you a sense of what they're trying to accomplish. Okay, now go to the next slide. Now, what's remote bogging? Well, remote bogging is when you use a loader. This is a vehicle that has a scoop on the front end, and they actually operate it remotely. They have a joystick and an operator, usually in a compartment not too far away, maybe slightly up the drift or something. Why would they do this? Because it's a lot safer. Okay, when you mine remotely or bog remotely, the bog is simply dig, load, dig and load. It's going to be a lot safer if you do it this way. Okay, so again, this is a first for Fiji, Harley. Okay, so we're seeing the mechanized mining and mechanized bogging, and this hopefully will have a great outcome. All right, so this is just a little explanation of what's going on. Let's go to the next slide. Okay, Nevada King, they haven't had too much news here recently, but they had some really nice results today, or not today, this week, a couple days ago, that continue to show there is high grade here. In fact, the high grade corridor that they're starting to define. And it also implies that there's a strong intrusive connection in particular to this high grade source. Okay, in this case, they hit 6.14 gram over 30.7 meters. And then they have another intercept, 4.15 gram over 35 meters. And so there's a couple others, but anyway, you get the drift. They've got some pretty high grade ore here, and it happens to be oxidized. Okay, I think I've talked about this frequently with respect to this project. Oxide means cheap, easy processing. Go to the next slide. In classic form, they do a great job of putting out maps to show where they've been drilling. You can see the plan map over here on the left, and then the cross-sectional map over here on the right-hand side. And most of this high grade in this area is relatively shallow, and it's a well-defined corridor now that's developing. And I think we can see that even better in the next slide. Okay, so in this slide, you can see now a footprint that's defined by these drill holes of a high-grade corridor that's developing. And I think this is absolutely fantastic because it's starting to show some size to it. And it's also, showing really good continuity from hole to hole. You can see the numbers that for the holes that are shown there, there's labels in blue that you can read. I think these guys I wouldn't be surprised if they keep chasing this thing, perhaps to the northwest there, and finding out it leads to further discoveries. Okay, this is a feeder zone of some sort. It's clear, and it's wide open. There's nothing cutting it off either to the northwest or to the southeast. So there's more to this story, and I'm sure they'll figure out what that is. All right, go to the next slide. All right, Kingfisher. Here's another porphyry story, and this one's really important for, with respect to what I said earlier about porphyries and their, erosional level. But Kingfisher, Dustin Perry's the CEO, has quietly and diligently picked up a commanding land position in the northern part of the Golden Triangle. This is in BC. And it happens to be in the same neighborhood that Newmont is operating. So you got Newmont's, which, they got their GT deposit. That's right in the middle of all this. But then you also have the Galore Creek deposit. That's a joint venture between Newmont and Teck. So you see Newmont and Teck in here. And now Kingfisher take a huge land position that covers basically two different porphyry systems. Okay, now I mentioned earlier that different magmas, yield different flavors of porphyry. In this case, we have one magma system that is older. Okay, and it's the one that you see called the Highway 37 project. Okay, that one is similar in age to it's an older system. It's similar in age to the KSM project that belongs to Seabridge. Now, Seabridge is well to the south, but it's the same general magmatic suite that formed this. Okay, so they have one collection of porphyries at Highway 37 that have, we'll say, a predominant copper, but slight gold component. But then you also have another suite now with this new property, which is called LGM. And LGM has more of an alkaline affinity to it. So it has a little bit more alkaline metal in the magma. And what that usually means is higher gold. Okay, so the porphyries that are shown in that red oval, that closed red oval, are the ones that they've recently acquired. And they're very similar to Galore Creek. This is a good strategy. I think Dustin's done a fantastic job here of building a story. And now they got to get to work. But they do have the ground and the targets to test. Go to the next slide. All righty. You can see here very clearly the porphyry belt that we saw in the small red oval in the previous slide. You can see here now how it fits together with that ground that Newmont has in the hatchery, or Newmont Tech has in the hatchery. That's that Galore Creek. Okay, that's that alkaline porphyry complex. So basically, they have secured the rest of the alkaline complex here, and they have some individual porphyries outside of that, the Newmont Tech joint venture, that are probably very ripe for discovery. And we're talking about copper gold potential. All right, so I think they've done a fantastic job. We know it's at the right erosional level throughout this area. You've got a number of mines in operation here. You got Red Chris off to the northeast. You got a few others, advanced projects like Galore Creek right in the middle of this. So we know we're right in the sweet spot here. And I think Dustin and his team are going to do very well going forward. So I'm glad to see him kind of make the pivot, the shift up to the Golden Triangle, and do a good job of putting together a very attractive land position. If I had to bet on a company that's going to make big discovery, like out of everything we have, this one looks like it's prime. Okay, well, let's go to the next slide. Okay, I'm at a disadvantage because I'm reading this off my phone, and I was going to read some of the numbers. But everybody's watching this. When you watch this on YouTube, do a freeze frame, or else go to the news release for the source of the information. And you can see some of the numbers that have come from these. Okay, I can read the Grizzly property, or Grizzly porphyry. They have 0.74% copper, 1.09 gram per ton gold, over 38 meters. And it's wide open. Okay, there's been very little follow-up on that. Okay, over here at the Hank Williams, they've got samples up to 0.9% copper, 0.27 gram gold, 6.8 grams silver, and then let me see if I can read these. At the Lucifer, my eyes are just barely in there, but about 3.4 ppm gold, so 3.4 gram per ton gold, elevated but not ore grade copper. But again, it's got that alkaline affinity. This is probably epithermal mineralization associated with the porphyry. So it just gives you a little sense of the flavor that they have. I think they're up in the epithermal regime, just above telescope porphyries. These are basically like that first case where you have the porphyries interjected into the epithermal regime. All right, go to the next slide. Okay, sorry, this is taking a long time today. Okay, we've got a couple of stories this week that have announced their programs up in the Yukon. These are reduced intrusion stories, and the first one I want to talk about is Rackla. They've got 2 targets they're going to test. So they're going to do some drilling at Hit, and they're also going to drill at Peak this year. I think this is great stuff. They're going to follow up on early stage results they had last year. You can see here the rendition of a reduced intrusion they have in 3D here. It's basically the Kelvin stock. So there is a magma chamber or magma reservoir at depth underneath the Peak that has generated this Kelvin stock and all the gold mineralization that's associated with it. I'll show you a plan view in a minute. Okay, so that's basically just a schematic of what these systems look like. They are very extensive. They lead down into the crust for, probably for kilometers. All right, these magma chambers go way down into the ground, and they produce absolutely enormous gold deposits. Go to the next slide. Okay, so the upper left image here, this is the Hit property. Okay, and they had some decent results last year, but they got some really intriguing soil anomalism along the margin of the Pluton there. The big pink thing is the overall intrusion, but on the shoulder there, where you can see the white drill holes they had planned, they got some really nice soil numbers back, and they saw sheeted veining and whatnot in there that looks a lot like, say, the Valley deposit that Snowline has. And they're going to test this year. Okay, this is a really intriguing target that, because of the positive relief, if they make a discovery here, it could be an ideal situation for a gold deposit. And let's hope they hit some high grade in here too. Like, it'd be nice to see gram to 2 gram type stuff like we see at Valley on a routine basis. But, don't forget, Valley sits on the edge of the intrusion as well. Okay, sometimes the best gold is right around the shoulders of these things. That might be the case at Hit. Now, over here in the lower right, this is the Peak property. They actually have 2 targets here. They've got the Cirque area, and they're going to do some drilling in there. That's within the intrusions, and they found sheeted veining. They also found really good soil or till anomalies around the margin of that Cirque. That's a glacial Cirque, basically a glacial valley. And they got really good gold numbers off of it. And then over here at Peak proper, this is just outside of the intrusion. There's another sub-intrusion over there. It's probably connected at depth. But they have a lot of surface samples, a lot of samples, both in surface as well as channel samples and stuff they've taken, show robust gold anomalism across that area. And they think if they drill down through that, they'll find the underlying intrusion and probably, a valley type, again, target here. That's right on the margin of a granite plug. All right, so we got 2 kicks at the can there. Let's go to the next slide. Onyx announced that they've got their drill permit. This is for the King Tut project, and this was recently consolidated. Apologize, I can't read the highlights over here because it's too fuzzy, but go to the next slide. Okay, King Tut, you can see, is kind of towards the middle of the photograph there. It's that orange polygon. They've got several targets in there, which are now fully complete. Yeah, the WEAS shown in the inset up here in the upper right was that hole has been filled recently through a land deal. And now they can go in and test main Tut even more thoroughly. Okay, so I expect big things out of these guys this year. I think they're going to spend most of their time and money here at the King Tut target. I think they're going to start work in July. But again, we have a company that has a really good shot at making a large reduced intrusive type discovery, much like Snowlands Valley target. Okay, and this isn't that far. If you notice, I mean, we're not that far from Valley here. Yeah, so this is probably one of the closest neighbors, in fact. All right, let's go to the next slide. All right, here you can see a closer image of the data they have. They have a lot of soil samples on the ground, the king tut part of the ground they had previously, and I can see the soils are very robust gold anomalism. They don't have data per se, at least soils and whatnot, across the intrusion inside of that WEAS inlier. But they do have historic drill data. Okay, so we already know from shallow drilling that there were some decent drill intercepts, like 21 meters of 1 gram, like right off. Okay, so, and these are shallow holes. They were not deep holes. They were just quick tests that were done way back, about 26 years ago or 28 years ago or something. And they also have a lot of high-grade samples at surface as well. And these come some from sheeted veinings. I think we've seen the photographs in the news release of the sheeted veinings sheeted veining that is an outcrop across this intrusion. This looks like a really ripe target. They're going to do some work to develop that better and then start drilling in July. All right, so very anxious to see how that goes. Go to the next slide. Oh, by the way, the green polygon or the green oval in the lower left of that last image, there you go. That is the size of Valley, okay, just for reference. Okay, so if you think Valley 10 million ounces plus, you know, how many valleys could we fit in here? Quite a few. Okay, so there's really good potential. Let's go to the next slide. All right, Inflection put out news a while back, and I talked about this, but this week, the CEO, Alistair Waddell, he sent me some information that I thought was really interesting, and for those of you who are geo nerds, I think you'll find this intriguing. Okay, so, and this relates to the porphyry discussion I had at the beginning. All right, so we talked about the targets that were defined by AngloGold. This is earn-in with AngloGold, and they're spending the money there. Okay, and they did some what we call tomography here recently. This is using what we call ambient noise tomography. It's basically using natural sound waves that are traveling through the ground to analyze the different types of densities, we'll call it, or speeds at which rocks transmit that sound. Okay, so blue areas here, the sound waves travel slow. Red areas, or warmer colors, they travel fast. Okay, and that more or less generally relates to the density of the rock, but not 100%, but pretty close. Okay, and you can see they've defined these very discrete anomalies with little yellow stars. Those are areas they're going to test. Now, a lot of people ask me about it and ask Alistair after, because this is really new technology. This is super new. They asked, what on earth are you looking at? Like, what is the meaning of this? Okay, so Alistair sent me some. And I thought I'd make a couple of slides just to show you guys how this works, okay? Because it's really darn cool. Go to the next slide. Okay, so first of all, to measure these sound waves traveling through the ground, they use little geophones. They're basically little devices that pick up these sound waves as they're transmitted through the ground. But the secret to make it all work, they use an array of these geophones over the area they're trying to test, and they are all linked to satellite. Okay, the satellite's not actually doing anything to directly read, measure stuff in the ground, but what it's doing is collecting the data in real time from an absolute multitude of these little phones on the ground. And this is what makes this technique quite interesting. Okay, now I remember reviewing this. This is run by FleetStar, which is, you can go to their website and look it up. But it is a new company that's got a new technique that basically can collect, we'll call it shallow seismic data, tomographic data, that can help in mineral exploration. And even though this is early stage, even though this is kind of one of the first uses for this, I think this has huge promise. Okay, why? Because look at the next slide. Okay, so in 3D, we can actually see the data and how it relates to say a porphyry deposit. Now, over here on the left-hand side, this is a porphyry deposit, very similar to the ones I showed way back at the beginning. And you can see an intrusion sticking up there with the porphyry wrapped around it, the bright yellow area. And then you can see the epithermal system above it. Okay, the rock there is kind of cooked up, it's hot springs and stuff. Okay, but there would be a big halo of alteration around that porphyry system. Okay, so that's what a porphyry looks like, in schematic terms. That's what it looks like in the ground, a cross-sectional view. Now, let's go over here to the tomographic data. This is actual data from, Inflection, and it shows you what the heck is going on, okay? So in that epithermal regime, that layer towards the top, there's a big blue span where the rock has been altered. It's been, made to transmit sound at a much slower speed. It's lower density. It's got more clays and stuff in it. And it sticks out like a sore thumb. Okay, that's beautiful. Wow, can you imagine doing this in other areas? You might be able to find all sorts of stuff. That's crazy. Okay, but even more important, as you get down deeper and get into the porphyry regime, look at the beautiful halo that there is around the porphyry. Okay, you see that big tongue of yellow sticking up? That's coincident with the actual intrusion itself and probably the porphyry deposit that wraps around it. But then there's a halo outboard from that where the alteration has kind of stirred up the rock and it's made it a bit softer, a bit lower density. Okay, and it's blue. If this proves to be true, if they drill that and they find something there, I'm in, man. I'm going to invest in this company. I'm going to use it on targets. I would recommend, Dustin Perry try it. I would recommend, all these guys that I've talked about with porphyries should give this a go. This is really cool stuff, guys. Talk about Geo Nerd Central. This is awesome. Okay, so maybe we have a new technique that could revolutionize porphyry exploration. All right, so I thought everybody might like that. Go to the next slide. Okay, and I think this is one of our last. I think this is the last one. So Novo had some news this week. Drilled at Belltopper. This is down in Victoria. This is the geology that's similar to Fosterville, in my view. We had some decent results. A couple of meters of high grade, even 15 gram. But we have yet to hit what I think is more like a Fosterville type system. Now, most of the drilling we did was up at the 11 Star area, which is towards the north part of our land tenure there. And I think most of the high grade that came out of this district actually comes from areas to the south. So, because of access to that area, we weren't able to get to it right away. But, perhaps we will in the future. Anyway, we haven't found the high grade that I've hoped for yet. All right, but I'm still hopeful about the property. All right, I think that's it, guys. Sorry I went so long.
All right, Kevin, you go.
All right, thank you, Quinton. Great stuff. So I was
just so you know, I can't hear my girl.
I'm gonna turn off with Quinton. Quinton, I'm just going to turn it off with you so it doesn't create echo. Is that okay?
That's fine.
All right. Thank you. All right.
So the sound got messed up. I hope that wasn't because of me. I was trying to get him to try to expand a little bit more on the guys coming into Eskay to take over managing that company in this, and in terms of what was Bruce Jack and how, because I think it was a pretty darn big mine, and these are the guys that found it, built it, and sold it, for quite a bit of money to a major mining company. So maybe you can learn more about that by most of you guys probably already know the Pretium story, but if you don't, it's something that's, we've got the Pretium guys, the guys that found, built, and sold Bruce Jack, now running Eskay, and I think they think there's another Bruce Jack on that property, and we think there's another Eskay Creek on the property too. So lots of good discovery potential there still. Anyway, if you're interested in learning more about our investment strategies, please do reach out to Merrick. His contact information is on the screen now, and I'll turn it back to you, Tavi. Godel.
Yep. I'm just going to expand a little bit on the Eskay because I totally agree. And I thought was one of the biggest things that is difficult in this industry, especially in the small cap names, is this transition of leadership in which it's so hard to find not only a quality CEO or a quality leader, no, number of leaders that actually will have, as the new company, large enough stake to have a skin in the game to perform. And this is an elegant solution to this whole thing. And I mean, Eskay mining still is a core position for Crescat. And we love their ground. I mean, we think there's just so much to be done there. So it's great to have, this new touch on the story. And I think Mac has done a tremendous job. But I'm really looking forward to this new leadership as well. So I think this is good stuff. But anyways, well, were you entertained yet? This is an interesting move today in the market. And we are about to finish up another stream. Thanks everybody for watching. Apologies, you saw that we had to have a call with Quinton here and have him on speaker too. I hope this was okay. But thanks everybody for watching. We'll be back next week. If you have any questions about the portfolio or anything that we're doing, I would suggest you to talk to Merrick. He would be the right person to speak with, and he can share more about what we are doing at Crescat, and especially in days like today, when our weeks like this week, where we had a shakeout moment, in my opinion, in which I think it presents a great opportunity for investors. Anyways, well, thank you everybody for watching. We'll be back next week. Take care.
Gold on for dear life.